The EU trade chief has met with Washington officials to try to head off tariffs. Maros Sefcovic has met with President Trump's top trade officials on Tuesday to try to stop the steep rise in US tariffs on EU goods due to kick in next week. However, the EU's Trade Commissioner later revealed on social media site X that the hard work goes on. Well, Mabrouk Chetouane is head of global market strategy at Natixis Investment Managers. Mabrouk, we seem to have seen some softening of language from the president on Monday. So does this mean there's a chance that the tariff threat could go away, or there's another delay to when they actually kick in? And how do investors actually navigate all this uncertainty?
This is the key question of the moment regarding tariffs, and this is, the strategy defended by Donald Trump. To promise the worst and deliver something a bit smooth. For U.S. citizens and for U.S. people, just to guarantee that they will, adapt. The strategy of the U.S. administration. All in all, we can expect some delays on tariffs. Donald Trump said already that we can see some sectors that would be spared by these, incoming tariffs. So, of course, we can see exceptions. We can see, some specific adjustment on these tariffs. Nobody can believe that the U.S. administration is ready, to impose 25% on all the imports that are coming into U.S. So definitely, it will be extremely painful for the U.S. economy, and I do believe that Donald Trump is a pragmatic person. So he's just been maintaining the pressure all over the places on all the governments and all the trading partners in order to get, exactly what he wants. Good deals, the guarantee that import products from the U.S. will be imported by their trading partners. So I think this is a marketing strategy based on maintaining pressure on the trading partners, and also from an internal point of view, it is the good way to smooth these tariff topics on the U.S. opinion.
Now, you mentioned the economy there, and I want to focus on that for a while now. All these tariffs and the noise on tariffs is coming as US confidence dropped for a fourth straight month in March. So is a recession in the US now a real possibility?
That the second key question of the moment. First of all, the question about tariffs, and the second one is the U.S. economy in recession or not. According to the models that we are looking at, based on the hard data, there is no recession in the U.S. so far. When we calculate the probability to see a recession over the Q1 based on this hard data, this probability is about 1.4%. So extremely low, and it corroborates at some point what Jay Powell said last week about the U.S. economic situation. Of course, these tariffs are introducing fears about inflation, fears about the state of the business cycle in the U.S. But we are really pretty confident on the fact that we are seeing just a blip in terms of U.S. growth, and we can see a recovery, a rebound of these confidence and this U.S. business cycle in the Q2 and the Q4.
Well, let's turn to Europe now, and data out of Germany seems to suggest a bit of an economic recovery. On Tuesday, we saw there was a rise in business sentiment in March. Are you as confident in the German economy as some of these companies seem to be?
ECB is, cutting rates. The situation in China is stabilizing. There is probably a ceasefire first in between Ukraine and Russia, which is a positive news, definitely. And these massive plans introduced by the in-waiting chancellor in Germany is another factor that is pushing growth to the upside. So all these indicators that we are seeing they are producing an increase in confidence, which is exactly the sense of the IFO index that we have seen yesterday. So clearly, yes, the momentum is improving in Germany, and we are pretty confident on the fact that it will continue to slightly improve. It is never spectacular in Europe, and in particular in Germany.
Now, one ECB policymaker has suggested that rates could fall from 2.5% to 2% by the end of the summer. Given that's what's going on around with tariffs, with the uncertain situation in Ukraine. Is this a realistic sort of expectation?
Well, it's more than realistic. It's absolutely vital for the Eurozone to see these interest rates, to see the ECB continuing to cut interest rates this year. Our expectations are below these 2%. And the governor of the Banque de France said that, these 2% target corresponds exactly to the market expectation. So it's not a surprise. It is just, reflecting market views. But we do think that if we want to continue to invest in our economy and to protect our interest at the European level, we need, these policy mix. Fiscal policy plus monetary policy joined together can deliver a very positive outcome for European growth and for European countries. But we need interest rates to go below, in our opinion, these 2% level. And this is why we do expect by the year end 1.75.
And that was Mabrouk Chetouane from Natixis Investment Managers. And don't forget you can get more videos on Reuters.com.